How's it going, everyone? Today we're going to be looking at Symbotic Stock, which has their earnings coming up in 2 weeks from now. And we're going to take a look at what you can expect with those earnings. The stock is up 57% over the past 6 weeks. It's up 59% over the past month. We're going to take a look at what you can expect from these earnings, which are going to be very important for this company. If we go ahead and take a look at the latest earnings report, they missed on earnings per share, but they beat on revenue expectations. And so we're expecting somewhere around a 1 cent loss for earnings per share with this next upcoming earnings report. And we're looking at $533 million in revenue estimates. So that would be slightly less than the most recent revenue that we got, but that was also a pretty large beat. So overall, the earnings estimates have been very off with this stock, and it's going to be very hit or miss. And that's something you should expect. Is it's either going to be a lot better than you expected, or maybe it's going to be slightly worse. So one of the concerns for Symbotic investors is the overall impact from tariffs. That was something they mentioned in their latest earnings report, and that could definitely have an overall impact on Symbotic's bottom line. But if we take a look at their last earnings report, they did beat for revenue, and you can see the total revenue growth. We're looking at the overall fiscal year results here. The total revenue growth was very strong for fiscal year 2024. They had about $1.8 billion in revenue compared to 23, which was about $1.2 billion in total revenue. So very strong year last year in overall revenue growth, as well as the GAAP net loss also improved substantially from a $208 million net loss in fiscal year 23 to an $85 million net loss here in fiscal year 24. And that's something you can see with these upcoming earnings expectations here is a 1 cent earnings per share net loss. You see that this company is starting to get very close to profitability. And that's something that this company has been trying to strive for a long time, is, breaking that profitability. And we're finally starting to get close to that. You can see adjusted EBITDA did turn positive from fiscal year 23 to 24. We had $62 million adjusted EBITDA for the year 24. So that was a very strong positive year for Symbotic, and we're looking for that continued growth here in fiscal year 25. And that's also something you get with such a massive backlog, which this company has. And you can see systems in deployment has improved from fiscal year 24. It was 44, and now Q2 25, we're up to 46. Systems completed in Q2 25 was 37 compared to fiscal year 2024 when it was at 25. So their overall systems they're putting out has increased a lot. They're starting to become more efficient with these systems that they're deploying. And you can see here they have a $22.7 billion total backlog. And it also says here 42% year-over-year revenue growth. So they've got a massive backlog with companies like Walmart. And that's really their main customer is Walmart. They also have other partners as well. But you have to understand that this company is basically married to Walmart. They bought out Walmart's robotics unit earlier this year. So a lot of positive things going on with Walmart, and especially that massive backlog. But if we take a deeper dive into these numbers, you can see overall revenue improved a lot year over year. March 30th, 2024, they had $393 million in revenue, and that improved to $550 million in revenue in this most recent earnings report. Gross profit also improved a lot from $30 million in 2024 to $108 million gross profit here in 25. So that was very good improvement there. Research and development also increased from $46.4 million to $61.5 million. So that's a good sign that this company is investing long term in developing, more innovative solutions for problems that they solve within the warehouse and supply chain, system. So but we can see that selling, general, and administrative expenses did cut into their bottom line. That increased from $48.6 million to $78.3 million. And you can see that gross profit was good, but that increase in selling, general, and administrative expenses did cause an overall operating loss, but that operating loss decreased from $65 million down to $32 million. So overall, we're getting improvement with this company. You can see net loss decreased from $55 million down to $21 million. So the company is getting closer and closer to profitability. You can see earnings per share decreased from 9 cents loss to a 4 cents loss year over year. So a lot of improvement here. That's what you're sort of seeing with this company is they're getting closer and closer, but they're just not there yet. Cash and cash equivalents. Balance sheet looks really good, by the way. $727 million in cash September 28, 2024. That improved to $955 million in cash and cash equivalents here March 29, 2025. Total assets also increased from 1.57 billion to 1.96 billion. And you can see accounts payable did go up. It went from 175 million to 220 million. Total liabilities at 1.54 billion dollars for total liabilities. So not bad overall. They got a lot of cash here. And I think that's the real good sign here, is that this balance sheet is overall healthy. They're increasing cash, they're not burning cash. So there's a real possibility this company can break into profitability soon, and they have a healthy balance sheet that can sustain them until that happens. And that's really one of the most important things you can see with a growing company, is that, are they burning tremendous amounts of cash, and are they decreasing their cash because they're spending more than they can take in? Is a company basically heading towards bankruptcy before they can turn a profit? And that's something you have to be very wary of here. But overall, I think this looks good. They're heading towards profitability, and we want to see them turn profitable soon. I do own Symbotic stock. I have an average position of $29 a share, and I'm up 81% on those shares. I own about $3,500. So a very small position in my portfolio, but I do love this company. I've had very good gains from the stock, and I consider myself a long-term holder. I want to see this company grow, and I think it has a very strong future ahead of it. And I think, despite the fact of not being profitable just yet, I think you have a lot of safety with this massive backlog. Last thing we'll take a look at, AT analyst ratings: 44% buy, 50% hold, 6% sell, with a median price forecast of $35 a share. Now, I think something you need to understand going into this earnings report is that there is any, if there is any impact from tariffs that cuts into the bottom line and causes an earnings miss, that you're going to expect a pretty hard sell off with the stock, which has happened before. You can see price to earnings, or forward price to earnings, is 740. And that's due to a lack of profitability here in the short term. And overall price to sales is at 2.69, which is not bad. But you are seeing a pretty stretched valuation with this company. PE non-gap's at 47. PE non-gap forward is 243. So there will be a hard sell-off if the stock misses on earnings, but if they're able to turn a profit or become even closer to being profitable as a business with that massive backlog in mind, and maybe some more improvement with their partnership with Walmart, you could see the stock continue to rise. But I am overall cautious because of the massive increase we've had in this stock, up 59% over the past month. So that's why I think that this stock could sell off pretty hard, which it has in the past. If you zoom out over the past couple of years, the stock sold off pretty hard back in 2024, but it has improved a lot as a company in the recent term. And I'd love to see it improve more with this next earnings report. Let me know your thoughts in the comments if you have a differing opinion, or if you are optimistic about Symbotic. I think it's a solid company with a strong future ahead of it, and I'll be looking forward to these next earnings. Let me know your thoughts in the comments. If you got value from the video, consider subscribing, and y'all have a good one.